Hello, hello. My name is Boston. I'm here with Aaron from the People's Capital Group, as well as Nate Olson. Again, this is the Level Up Podcast. Aaron, we're super excited to have you on today. Thanks for coming on.
Absolutely, Boston. Glad to be here. I'm New Jersey.
Nice, nice, nice. Aaron, just to start off, to give the people an idea of who you are and kind of what you do you want to tell us a little bit of a backstory of how you started your business, what you're actually doing in your business, and what's it really about?
Sure. So we're strictly New Jersey focused. We buy apartment buildings here in throughout New Jersey within an hour commute to Manhattan. Been doing this about 13 years now. Read a book called Rich Dad, Poor Dad as I graduated college in 2009. And a pretty dismal market at that time, just job market in general. So I think the only companies hiring were commission-based insurance sales or enterprise rent-a-car. Nothing against either one of those, but just wasn't my passion. So I actually moved out to Steamboat Springs, Colorado for 6 months to taught kids how to ski and read a bunch of books on real estate investment and learned the basics of how to start and manage a real estate investment company. I moved back to Jersey in 2010 and got my real estate license and kind of learned the business basically as a realtor and a wholesaler. Worked with distressed properties, REOs, short sales, worked with a lot of investors, started my investment group, a New Jersey Real Estate Network, which now has about 5,000 members in it, and just did a lot of public speaking in the tri-state area. Met my business partner, Seth Martinez, to today at a real estate networking event that I was speaking at, and we had the same vision to own and operate a number of apartment buildings throughout New Jersey here and invite other people to participate in those buildings. And we started with buying a 6-family from stapling a sign to telephone poles that said, "We buy houses." And got a 6-family for $220,000, put another $60,000 into it, refinanced our money back down a year and said, okay, we could do this. And just kept recycling our cash from there on and eventually ran out of money and started raising capital from outside investors, which really has been the pinnacle of my career, one of the most challenging things to do. And today we have about 113 investors, about a 83% reinvestment rate. Our in-house property management company, we launched in 2015, PCG Property Management, and just been acquiring assets throughout the Jersey area here for the last decade and trying to do what we say we're going to do for our investors.
It's amazing.
Yeah, that's awesome. One thing that you said that resonates with me for sure is that Rich Dad Poor Dad. From a super young age, my dad had me read that book, right? So it just, there's so much knowledge in there as far as what's the difference between an asset and a liability, right? So just with that book alone, that's super cool. That I'm super intrigued that that's how it kind of got your wheels moving, I guess, right? So
Yeah, absolutely.
that's super awesome. So what would you say is your dream client to work with? What kind of person do you absolutely love working with? Is there a specific person that you have in mind or specific, something like that, right?
Investor. Yeah. Like investors.
Investor,
Where do you get them? Yeah.
Sure.
Where do you get them from?
Yeah, well, we really like working with single-family offices. A single-family office is primarily, a high net worth family, generally like $250 million net worth or greater. And they, you're talking essentially to the patriarch, the owner of the family wealth, and they need you to place their capital properly and preserve their wealth, give them tax benefits,
Yep.
make sure they don't lose money, create cash flow and wealth liquidity events to build their wealth over time. And they're relying on you to be an expert in your industry and your market and operations and so on to make sure that the project they're investing in is successfully accomplished. So we really like single-family offices. They tend to be very savvy investors, and a lot of times working with a few $1 million from a single family office is almost an easier client than someone that's self-directing 50,000 IRA. Now, we love our investors that self-direct $50,000 from their IRA. We have over 100 of them. It's helped us get to where we are today. They love working with us, and about a third of our investors use self-directed IRA, but we have a lot of C-suite executive, doctors, lawyers, whatnot, and business owners that like putting the minimum investment of $50,000 into every opportunity we have, and they're well diversified over a number of projects with us, and those investors are great. Now, they're sometimes though, the less someone invests, the more precious that money is to them, and I get that, right? And they're gonna be a bit more of a squeaky wheel, and that's okay. It's their money. They're our boss. We work for them. So, but sometimes the larger investors that can write $1, $2, $3 million checks, to them, they have 250 million. So it's really a small diversification of their total wealth. Where someone diversifying $50,000 from their IRA, well, they might only have $200,000 in their IRA. So that's 25% of their retirement account. So you better bet they're going to be a little more, of an investor that's going to need your attention. So sometimes the smallest investments require the most amount of focus. That's fine. We treat everyone's dollar the same, whether it's 2 million or 200, right? So, but that's our ideal investor. Now, a multifamily office, just to get off on a tangent here, is a little different. A multifamily office is a collection of smaller family offices generally. And there's usually a gatekeeper, like an RIA, registered investment advisor, who's going to basically be managing a collection of anywhere from 2 to 100 family offices. And that person's job is basically to make sure they don't make poor investments. They're kind of a wealth advisor, an RIA, and they act as a gatekeeper. So they're very hard to get through. Where a single family office, you're talking to the person who probably tightened their bootstraps and built this business from the ground up, or took a medium-sized business from their parents and grew up to a large-sized business. So these people are savvy in business, but also work off relationships and gut feelings, because it's kind of got them to where they are today. Where a wealth advisor is going to be like really more like digging into your analytics, looking through your past performance, and all that's important. And single-family offices will do the same thing, but an RIA's heart isn't in it. Their biggest thing is like, how do I protect my reputation? How do I protect my clients? And I get that. And that's my job too, is to protect your money. But they're much more risk adverse, and the relationship doesn't matter as much. Where a single family office, that relationship's really key. They can work off their gut. And that's important when developing a long-term investment relationship. So that, Boston, is our ideal client.
Beautiful.
Cool.
And then I want to transition. What makes you different from everybody else doing what you do?
Interesting. Well, boy, that's a good question. I would say it's our passion. It's our ability. Seth Martinez and I, we've been through a lot together. We've made money together. We've lost money together. Never investors' money, but we've lost our own money. We've learned, in the thick of it. We've cut our teeth on small deals. I used to be called the $60,000 man in my real estate office when I worked at Remax, and everyone made fun of me because I sold small, crappy little pieces of real estate that no other realtor wanted to sell. But man, I was hungry. I'd get up early, I'd work late, I'd staple those signs to telephone poles in a suit and tie. Seth and I really, we're very scrappy. We're entrepreneurial minded, kind of a startup mindset. We work hard. And we rarely take time off. So, we really go at it, and we treat everyone's money like it's our own. In fact, even more cautious. I'm probably more risk-taking with my own money, actually, than I would be my investors' money. So we really have that, startup mindset, that entrepreneurial, resourceful mindset. We keep our overhead very low. We don't bring on a lot of staff. We outsource where we can. We'll hire a virtual assistant far before we bring someone in the office for a much higher salary. We really recognize how to keep a lean, mean operation running here, because we always had to run our business that way to build to where we are. And that mindset hasn't changed. We don't have that kind of like corporate heavy cost, heavy overhead type of mindset. We really run a pretty lean, mean operation here.
Beautiful. And what's something that you're still figuring out? Obviously, you're working every day. You're in the thick of it, right? There's trial and error with starting any business. So what's something that you'd say you're still figuring out today?
Wow, I learn so much every day in the property management side, but I'd say personally what I'm really working on is I really enjoy public speaking. I've been told I'm very good at it, but sales is something completely different. And you have to know your strengths and weaknesses in business. And really, to be a successful entrepreneur, you need to know sales for the most part, or understand them pretty well, unless you're Elon Musk, who really, his story is a whole different thing. But for the most part, any entrepreneur needs to understand sales. So that's something I'm always kind of working on. It's not necessarily where my passion lies in the business. I really just like, building relationships, helping people build their wealth in real estate, owning large scale buildings is very attractive to me, and the art of the deal. But sales is super important to understand how to navigate a conversation, how to tell your story properly, how to inspire others to take action, because there's a lot of syndicators out there. There's a lot of big websites you can go to and put $25 in, and now you're investing in real estate. So you're up against a lot. And people invest in people. They invest in stories. They don't invest in spreadsheets or pitch decks. All those things help. They don't invest in markets or property types. They invest in people, and they invest in your story. So being able to explain your story, convey that message, and inspire someone to invest their hard-earned money in your dream and your vision is a skill set I'm always working on and have not perfected, but continue to work on that for sure.
Beautiful. No, that's sweet, man. I mean, that's sales. I agree. That's where I kind of started out. I was in the roofing industry, so I was kind of roofs, and that's kind of where my roots started, right? And that's always been the biggest thing for me. Not only does it help with communication with other people, but it helps you prove your value to others as well, too, right? Like, what are you actually capable of? And I think that's a beautiful thing, and I couldn't agree more with you. I think everybody that is in business or is an entrepreneur, the first thing they should be learning and grasping is sales. Now, a question for you. I know we were talking about books. Do you have what's your top sales book of all time? Do you have like one that you lean towards that's like, wow, like this is that book, right? That opened my eyes.
You know, I probably need to read more sales books. That's definitely, my business partner would definitely give me that feedback. You know, it's not something I like wake up and have passion for. I have to like force myself to study it and enjoy it and learn it. One book I've been meaning to crack open more is Your Next 5 Moves by Bet Davis. That one was interesting. He's a guy I follow in the space. You know, he's a pretty big guy out there in the entrepreneurial space. There's another one I'm reading, actually an ebook right now, and it's called Unlimited Investor Leads. It's from this company M1. It's like a marketing company. It's a little bit of a pitch to use their service, but there's also some good nuggets of information in there. So I'm reading that, which is, it kind of explains like build the story. You know, basically it says, you know, people don't invest in Excel models or pitch decks. They invest in your story. So they're all about kind of building out your story and the marketing funnel you create with them.
Nice, man. I like that. As things grow in your business, what part of the customer experience are you most excited to level up?
I think we're always improving both. So we have two customers. First, you know, we have the investors that invest their money with us and trust us with their hard-earned money, who we have a responsibility to report back to, not just according to the SEC, but, you know, morally, right? And so our investor reports that go out on a monthly basis are getting more and more in depth and more professional. I like to include details on renovations and links to pictures and listings and so on to really keep them abreast of exactly what's going on with their property. The payment system's out to them. We went from quarterly to monthly, which is a nice touch you can have with your clients every single month. At the end of the day, what matters the most for most people is like, what's my real ROI? What's coming back into my bank account, my investment, right?
Yeah.
And once they're invested. And so doing those monthly distributions is a nice way to kind of remind your client, hey, here I am, here right in your checking account. Here's your ACH deposit. So that's a nice touch. And then, you know, we always say a happy tenant equals a happy investor, right? If our tenants aren't happy and paying their rent on time and taking care of their unit and enjoying their quality of life in our real estate, then you're not going to have a happy investor, because your cash flow is not going to be hitting properly. It's not going to be going out, and your distributions might be paused. So we work very hard to maintain happy tenants, good quality buildings, repairs on time, you know, and on budget, but you know, managing service calls and so on, managing tenant expectations with the rules of the areas they live and so on, the buildings they live in. And you know, if your tenant is kind of think of like a model, is your upstream client, you know, they're the ones producing the income to the company, and then your investors are the ones downstream who are receiving those net profits. Everyone has to be happy, you know, and the investors are happy normally by report, even if there's a challenge. Hey, we had a challenge, we had the pause distributions, here's what happened, but here's the solution, right? So I never go to my investors with just a problem. I go to them with what happened to give full transparency, and then the solution, right? And how we're going to solve this problem the timeline it's going to take to solve it, and what the desired outcome is, and what, another possible outcome could be to manage everyone's expectations, right? And that's the most important thing. And it's same with tenants. What do we expect from them? Here's the rules. Here's how you pay your rent. We don't accept cash, for example, right? And if a tenant gives us a wad of cash, we give it back to them. Say, no, give us a money order, give us a certified check. You have to train your tenants and, quite frankly, train your investors, right? Like, hey, you know what? Here's when you get the updates. Here's the plan. But manage everyone's expectations, right? So train your tenants, train your clients, make sure everyone understands the expectations of each party.
Yeah, I think that's huge, because if you don't set those expectations right away, there's so much room for, I think you said this, but you actually meant this, or he's saying this, and I heard over here you can do this, right? It gets pretty complicated when the expectations are not set. So I couldn't agree more with you. I've had some experience with that myself, for sure.
Sure. Try to get things in writing.
Yeah, right. Exactly. Okay, I have a good one for you. Have you messed around with any AI tools yet? I know we were kind of talking a little bit about how you hired, instead of hiring like real in-house people, you have maybe AI or something like that to take care of some of that stuff. Have you messed around with anything like that and integrating it into your business?
We are always trying to. It's complicated on the fundraising side because no one wants to talk to an AI bot when it comes to investing their money. On the property management side, it is more easier to implement. Right now, we work with Appfolio, which has an answering service. I think they probably implement some AI in that. Where I really implement AI is more so on due diligence, researching comps, sales comps, rental comps, getting information on a property in general or a market. ChatGPT is great for that, right? And you could say what used to take me hours now takes me 5 minutes, if that, really 30 seconds.
Yeah,
so,
right.
And he also drafting emails, drafting marketing pieces, texts, like mass texts and so on, even some like social media posts and things like that, and kind of helping me perfect and tighten up posts. But you got to be careful with social media. I use this tool, Opus, and it breaks up your podcast, right? We have the Passive Cash Flow podcast, so it's about a 30-minute podcast, and then we put it into Opus, and it makes like 12 clips. Now, so I experimented, and and then it automatically syndicated out to all your platforms, right? LinkedIn, Facebook, so on, right? And so I experimented, and I had it going to all my platforms for 30 days. Okay. Instagram, and what happened was Instagram and Facebook did well. They improved in their numbers. Instagram much more than Facebook. LinkedIn was devastated. Basically, no one on LinkedIn wants my AI-driven, 30-second clip. Like, it's so obviously kind of cut up by AI. They want real, organic Aaron writing stuff about the challenges of life and so on. And
a human touch.
Human touch, right? And you could tell when it's an AI bot. You could get also like. Now they even have replies on LinkedIn that are definitely done by AI bots, and I'll respond to them because I know the algorithm, promotes that, but I know I'm responding to an AI bot, and it makes me just not like that person, So basically, you got to know when to use AI and when to actually be a human being. And I think what we're going to see is more and more desire to actually engage with humans. I know no one likes calling up and getting the automated operator. We've never liked that. That's been around for years. So there's certain times, it can work, but you got to be careful losing that personal touch, especially if you're talking about other people's money.
Yeah. Yeah, no, for sure. If you had a clone, what's the first thing you'd hand off to them? I know that's kind of a weird question. I got a couple weird ones in here too. So
these are great questions, Boston. They're great questions. So I would, probably just general follow up with, potential investors. It's a lot, it's a lot of hit and miss. The sales part of my business, essentially, right? Kind of following. Now, I do have a client relations manager that handles the follow-up to most accredited investors in general, high net worth individuals. I'm more focused on family offices, RIAs, and ultra high net worth individuals. So, but even that, is a lot. And so that could be a lot. What I really enjoy is actually structuring the deal, like the debt and the equity and going through the underwriting and tweaking everything and kind of making sense of it and how to get the best returns to investors. The actual capital raising, I mean, I've been doing that for a long time. I've probably raised $20 million. It's a lot of phone calls and emails and follow-up and meetings, and it's a grind. So yeah. I would have clone Aaron go raise the money and call me when it's ready.
Nice. Yeah, I guess that's not your favorite part of the process, but it's still a part, right?
Yeah, I like the part where I win. I like the end when the investment's complete and we line up, all these investors. For one, it's a little bit of like herding cats, I like the day we close on the real estate. That's great because you work so hard to fundraise for a deal, and then you finally get to the closing table. It's very rewarding.
Yeah.
Are you self-funding all your deals, or are you still getting financing? Is it a combination of both, or is it?
Yeah, it's a combination of both. So we'll do debt and equity, right? So generally we're about 65 to 80% of the project is funded by debt, depending on the type of debt we take on, the type of project. And then the remainder is raised from private equity.
Okay. And are you still doing any of the small deals? You mentioned you're doing small stuff like 60,000. Mike, I got a question because I was looking into Section 8 at one point. Are you doing anything with Section 8, or do you just steer clear of that?
Oh, we have plenty of Section 8 tenants. Yeah, absolutely. Okay. In fact, we have potentially one coming into our building right now in Passaic, New Jersey. So, yeah, I mean, Section 8 is an acquired taste, but we were very familiar working with Section 8. Quite frankly, the most frustrating thing about Section 8 is not the Section 8 tenant, it's the Section 8 office. It's the government authorities you have to deal with who never call you back, never email you back, are the worst customer service ever. Totally like bureaucratic, it just no attention to actually responding or communicating with you. You have to like drive to the office to get an answer sometimes. It's very frustrating. But Section 8 tenants themselves can be very fine, but we also have a debt fund that does fix and flips. Seth Martinez and I, we've done about 60, 70 fix and flips in our career, about 100 wholesales, about 300 transactions overall. So we've raised money in our debt fund, and investors participate in that, and they hold a promissory note, and we use that money to fix and flip properties. We've bought a piece of land. We're working on getting that approved. So smaller deals like that.
Very cool. Are you a fan of Grant Cardone?
I know Grant Cardone. Yeah, I mean, who doesn't know Grant Cardone?
Yeah. Right?
I respect Grant Cardone for his hustle. I think he's a very successful entrepreneur. Grant is in the business of sales. He is a great salesman. I, wish I had a little more of that sales skill that he has. He's really sharp at that stuff. He's in sales and marketing. He happens to be in the business of real estate. Now, I know plenty of people that have invested in Grant Cardone's deals, and I've seen his pitch deck before. And, he's a guy that he sells the sizzle, not the steak. But
sure,
I'm probably just jealous because he's like one of the best fundraisers in the industry. And what should we learn from that? Well, maybe my pitch decks have too many numbers. Maybe they're too transparent. Maybe I should just buy really beautiful, expensive Class A real estate and get really well done, Photoshop pictures of them and put together a beautiful deck and like sell the dream. I'd probably be more successful if I did that. And when people asked about the numbers, kind of quickly answered and moved on. But that's not really the business I want to run. There's a lot of upsell he does. He sells coaching and so on. And some of it might be worth the money. Some of it might not. But I also know from a lot of his investors that like once you kind of invest in one of his deals, you basically spend the remainder of eternity getting upsold his coaching programs and so on. And maybe they're worth it, right? Maybe they are certain levels. Maybe they're not. So, but he's extremely wildly successful. So props to that.
What do you think of his Bitcoin fund with the real estate? Are you familiar with Bitcoin? I'm assuming you are with some of your own. Do you have care to share any of that? What your thoughts are with the future of Bitcoin and some of these things?
Sure. Well, we own a Bitcoin here at People's Capital Group. We wanted to buy a full Bitcoin. We did. We bought around 30. Yeah. So we're doing pretty good on that.
Nice. Congrats.
I'll tell you a little story about my personal experience investing in crypto. I am a fan of crypto. I think it is a smart asset class, but there's, like any asset class, winners and losers. And I was definitely one of the losers. I invested through Voyager. And like any real estate investor, I had a big liquidity event. I was very liquid. And it was like 2020, the pandemic was hitting hard. My buddies were all like ripping it on crypto. And, you know, one buddy's a school teacher. He like had all of his money in Voyager, and he ended up getting me convinced to invest in Voyager. And so I just went on the app. I had no idea what I was buying. And I bought all the altcoins, and I like read the little summary about it and put like $2,000 here, $2,000 there. And I had about $50,000 invested through the Voyager app.
Yeah.
And I invested like 2 weeks before the basically crypto collapsed into the crypto winter. So the first 2 weeks, my investment went up like 10%. I was like, I'm the smartest real crypto investor ever. Then it dropped. And it dropped significantly. I sold a good amount. I ended up having about $35,000 invested. Voyager filed bankruptcy. My 35 grand ended up being about $2,000.
Yeah. I'm very familiar with that. I dodged the bullet on Voyager. I almost got taken down with Celsius, but I was fortunate enough. I had, you know, a sizable amount, like $400,000 at the top of that I was kind of playing I was buying, you know, land and stuff like that over here that I didn't want to cash out, so I kind of played there. I leveraged up my crypto to take that money and be able to invest that, and it did very well. It actually ended up like tripling. So ETH at the time was pretty low when I had bought into it, and I knew it was going to go up because I knew we were in the bull run. So I just basically leveraged my money against, you know, taking out a loan with Celsius. And thank God I paid it off. Like I missed it within like 3 weeks. So I paid off my loan, got my assets back. It was a good thing, but I almost got taken down with that one. So we all have those stories in crypto where we've had ups and downs, but if there's one thing I've learned, Bitcoin. The rest of them are just crap coins at the end of the day.
Right. Bitcoin and Ethereum are the two ones I would put my money into. A lot of the other ones are just gimmicks. And but I was like, you know, thinking I knew something. And I also broke my cardinal rule. Don't invest in something you can't explain. You know, to me, real estate makes sense. People need a roof over their head. They need a place to run their business, right? We all know, we all see it, we all live in it. We all understand real estate for the most part. At least the basic necessity of it, right? So we'll always need a roof over our head, you know, 1,000 years from now. So I can't explain most altcoins to you. I can explain Bitcoin a little bit. It's kind of like the new gold, you know, so I get that. I can't explain Ethereum. It has some actual uses to it. A lot of platforms, you know, are run on it and so on, so I can't understand that. What I didn't understand is that when you invest through an app like Voyager, you don't actually own your crypto. Voyager owns your crypto. And until you put it in cold storage, you're basically at the mercy of this company, you know? So we have our crypto in cold storage now. I think by $2,000 went up to like $5,000 now. I still have it in Coinbase. I figure if Coinbase files bankruptcy, the whole thing's going south. So, you know.
Exactly. I agree. Yeah. Exactly. Well, thanks for sharing that, man. That's congratulations on the Bitcoin, you know, accumulation that you've, you know, that's a big deal. I think it's going to be worth a lot of money, you know, in 5-10 years from now, where you'll be one of the few that, you know, holds a majority, at least that percentage. So congrats. That's cool.
Thank you. Yeah, I think it's going to $1 million in time. Yeah, I think so. Yeah. It's going to get there. I don't know exactly when.
Limited supply and limited demand.
Yeah.
Well, I think the crazy number too, even like if you look into this stuff, but I think by 2035, I want to say it is 99% of all the Bitcoin will have been mined. So the last 1% will take place being mined over the next 100 years. So that's obviously going to create supply and demand. Yeah. But I think they're doing a good job, you know, in terms of playing games like they do with gold and silver. You're seeing a lot of that. The price has been manipulated on that. You know, the banks have been shorting silver to keep the prices down, and now you're seeing it kind of, they can't quite hold it down because of the demand and stuff going on in the world and stuff like that. But I think eventually the same will happen with Bitcoin too as well. I don't know. I think it's a good legacy asset for sure at the end of the day. But I'm kind of interested in what they're doing as far as, like, I know Grant Cardone's brother, Gary Cardone, I want to say his name is a really big Bitcoin bull. He's been selling off a lot of his real estate and getting into Bitcoin, just because, you know, you don't have all the problems that come with some real estate stuff.
Sure.
But I think there's a combination for both. I think it's good to be diversified. I really think that real estate is really good for a lot of the tax benefits alone. I mean, you know, it's a huge. I've got a friend of mine that does what you do, and I just can't believe. I mean, he does pretty well for himself, and he's able to, you know, he's a lot wealthier by being on the real estate side than a lot of other businesses, just for the tax benefits alone on what he's able to, how he's able to offset that. So it's a good space, but yeah, it's pretty cool what you've been able to do with it from where you started. So congratulations, you've had a lot of success. Do you have a family? Do you have kids?
Yeah, I have a 4-year-old son named Dean. He's the light of my life and amazing boy. Unfortunately, I'm divorced, but you know, back out there and putting, you know, it's interesting world these days with the dating apps. That's a whole other podcast.
It is.
Man,
It is.
that's
No,
cool.
I agree.
So
Go ahead.
yeah, so you definitely spend some time with your son. You've got custody quite a bit where you're
Yeah,
able to
it's
have him.
50-50. Yeah, so I have him
Nice.
half the time, and I gotta say, you know, it's actually, there's a lot of benefits to it. Like, you know, when I have my son, I'm fully recharged and ready to be the best father I can be. Where a lot of my friends, and I remember this too, when I had, you know, when I was married, and you kind of are perpetually exhausted as a parent, you know, and especially with young kids, you know. So you're not always able to give it, you know, 100%. Where when you have your son half the time, and he's 4 years old and requires, you know, a lot of attention and love and care and so on, and you're able to really commit yourself to that period of time you have him, you know, and that's be the best version, the best dad you can be. And that's something that I like about this structure. I do miss him on the days I don't have him, but it's not the end of the world. It's half the week. You know, there's lots of people that travel during the week or whatever. It's kind of like the same thing. So I still see him, you know, half the week. So yeah.
Where did your drive come from? Because most entrepreneurs, the backstory is almost more interesting than the current. Did you have some trouble growing up or anything like that, where it really motivated you to want more, or what did your backstory look like, if you don't mind sharing a short version of that?
Sure. Yeah, I mean, I was definitely getting in trouble in school a lot, in middle school, you know, and a little bit less in high school, but, you know, definitely speaking out in class, didn't really like the whole, you know, sit still and listen to the teacher type of thing, and was like not really challenged by school, you know. And then when I finally got into college and started majoring in entrepreneurship at Rowan University, I did start to really thrive in college there and get on the dean's list and so on. But when I started to do something I really enjoyed, you know, and because school could be annoying, you know, I couldn't tell you the first thing about calculus, but I took calculus 1 and 2, and I have no idea why. I still don't to today. Like, I didn't even know calculus, you know, but apparently to get a business degree, you have to learn freaking calculus. Like, and I still have no interest in calculus. I never will, you know. And so I can understand accounting and things like that, but calculus, come on. So, but I did, you know, I was a second, I have an older brother, you know, so kind of always, and a younger brother too, younger sister. So kind of learned how to lead and follow.
Sure.
And in a sense, kind of lived in the shadow a little bit of my older brother. So always had to kind of like overperform and be very competitive, you know. And then just naturally, I have a very outgoing personality, and I'm very comfortably in the center of attention. In fact, I prefer to be the center of attention and so on. And so, you know, just kind of that scrappy little mindset of like a younger brother to, you know, compete and achieve and win, I think has always been embedded in me. And just, I can't really control it, you know?
Yeah.
Nice.
That's cool. Thanks for that, sharing that story.
I feel super similar to you. I've always been, in class, I was always like butting out and, you know, doing all this crazy stuff, I guess. Because I could never sit still, you know, but it took until, you know, I found something that's interesting that I can actually lock in and learn, you know. Like in high school, kind of similar to you, I figured out, like, I wasn't always the best at school, to be honest with you, but when it hit like probably my junior and senior year, I was like, let me give this a try. I never really gave it a try, and when I really applied myself, you know, it worked for me, you know. So it was just actually, you know, I don't really care to learn science. I don't really care to learn English, right? But if I just set that aside and worry about actually learning how to learn, is the way I look at it now, you can actually take something from it, right? the actual learning is what they're teaching you, not what they're putting in front of you, the material they're putting in front of you. So, yeah, I agree.
Yeah. Learning how to pass the test, learning how to follow directions. There's a
Exactly.
lot of
Yeah. Yep.
And listen, life is about following directions at certain times. It's also about thinking critically, and I hope we don't lose that in our education either.
Yeah,
I agree.
it's true.
I agree. I got two more questions for you. What's your big vision for where the business is headed in the next 2 to 5 years? Do you have like some goals that maybe you have, or what direction you want to maybe switch to, or stay the same and continue to grow in that way, or what are you thinking?
Yeah, well, right now we're acquiring a $18.5 million Class A asset, which is very exciting. We're raising about $6.3 million to do that. And that will grow our AUM by a little under like 50% or so. I'd like to ideally close 2 of these this year and grow our AUM by 100%. And I'd like to continue to double our AUM every year. It's a bit ambitious, but I think we can come close. Even if we can grow our AUM by about 50% a year, that would be a good spot. Get us up to about 60 million this year, and then about 90 million next year, and then ideally about 130 million or so by 3 years from now, and kind of grow at that pace. About 50% a year would be great.
Yep.
Continue to build out our fundraising strategy and our team there, our marketing, our brand consistently. And then management company naturally grows as we buy more assets and just kind of improve our people that we hire there and our processes. So that's my goal, and then start to exit a lot of assets over the next 3 to 5 years also. And then either continue to grow from there or just maintain kind of status quo around like 300 million AUM, somewhere around there.
Beautiful.
Cool.
Yeah. And then if you could give one piece of advice to someone just starting out in your industry, what would it be?
I'd say stick to one strategy and don't be guilty of the shiny object syndrome, which a lot of us entrepreneurs are. Now I'm doing Airbnbs, now I'm doing apartment buildings, now I'm doing fix and flips, now I'm doing, stick to one part of the industry and do it really well. Don't do more than like 1 or 2 markets. Be the master of your market. Probably pick a local market and just make connections in that market and learn your part of the industry, your little niche very, very well. Be the best at something particular and not a jack of all trades. So yeah, and that's it. Stay focused, hone your craft, and dial in.
Love that.
Well, awesome, Aaron. I had a great time chatting with you today. Where can people find you, Aaron? Some of your socials, I don't know if they're all the same or if you have some different ones. Where can they find you if they, want to reach out?
Sure. So I'm most active on LinkedIn, Aaron Fragnito, Aaron Fragnito. That's the best way to get a hold of me there. But you can go to peoplescapitalgroup.com, and we have ebooks there, white papers, webinars, and so on. We have networking events that go on twice a year. We have building walkthroughs twice a year. So if you're local to New Jersey, you can come to an in-person event. If you're not, you can go on YouTube, put in People's Capital Group or the Passive Cash Flow Podcast. So our podcast is on all major platforms, Spotify, iTunes, YouTube, so on. And that's the Passive Cash Flow Podcast. It's a great way to check out our content there. But I'd say peoplescapitalgroup.com is the best place to really dig into all of our content there. We don't sell education. We just strictly help people build their wealth in real estate. And we're normally acquiring 1 to 2 buildings a year. They fill up pretty quick, so you go to peoplescapitalgroup.com, get in touch with our team there, join our wait list, and check out our upcoming projects.
Beautiful.
Very
and you
cool.
can find us at the Level Up Podcast Show.com if you're looking for us. My name is Boston. This is Nate. And Aaron, thank you so much for the podcast today.
Thank you, my friend.
Thanks,
Have a good
Aaron.
day. Thanks, Nate.